Good morning, ladies and gentlemen. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and do I have a great show in store for you, as we always do. Guys, join us here for Market in the Morning every Tuesday and Thursday. Today, we have our co-founder, Nilabh, on with us. He is great. He's got a great knowledge of fundamentals. He's the one who co-founded this awesome platform that we're going to use. That's Market in the Morning. That's going to be Market AI. We're going to go over what's going on with gold, the S&P 500, some of the big headlines that are moving markets as well, and so much more. So hit that like and subscribe button because Market in the Morning starts right now. All right, good morning, everybody. Good morning, guys. Nilabh will be joining us shortly. Let me just pull up. We'll cover some market, we'll cover some levels, and we'll see what's going on. Guys, drop a good morning. Let me know what you're looking at today. I know I'll be trading the ES and NQ myself, but gold and silver is definitely something on my radar. Guys, yesterday silver was able to rally above 110, above 118, really flew high. I mean, it hit highs around that 118 level and then sold all the way off back towards 102 again. That is $900 billion worth of market cap taken out of silver in a matter of an afternoon. So this was massive. Guys, we have the one and only Nilabh on joining us now. Let's get his take on silver. Nilabh, good morning, man. How are you?
What's up, Kevin? Good morning.
What's going
How's it
on,
going,
bro?
my
Good
friend?
morning.
How you been?
Dude, I'm doing good, dude. I'm excited. See what markets have in store for us, see what headlines are going on. And, I feel like it's been a real push-pull lately on new tariffs here. Never mind. New tariffs there. I know recently he mentioned something about new tariffs on South Korea, but he pulled the new tariffs on Greenland and the EU.
Yeah.
Would love to hear your take and breakdown market as well.
Yeah, well, that's a classic Trump playbook, right? Come
Yep.
out swinging, come out with the bat swinging, and then when it's time for game, you pull back a bit. It's like if I came to you and I was like, "Hey, Kevin, I'm gonna buy this from you. I'm gonna sell you this car at $300,000." You're gonna be like, "Nilabh, that car's not worth 300 grand." I'm like, "It is worth 300 grand, and you're gonna pay that." You're gonna be like, "I can't afford that." I'm like, "Okay, you'll pay 270." You know what I mean? Now you're gonna have to work your way down from the most outrageous claim ever. It's like
Okay.
when it came out, 140% tariffs on China.
Yeah.
Everybody, like, we knew he was gonna walk those back, right? Negotiation 101. Come out swinging, right? And now have them work down from your advantage. So it's the same playbook that he talks about in his book that he did in 2018, 2019 with China going after the initial 10% tariffs that he was imposing, right? It's the same playbook. It's how he does business. It's how he does politics. It's basically how he does life. And I think it's a pretty cool way to conduct business is in a way of a power dynamic is that you're automatically placed at a higher power in the higher power bracket, right? So same thing with Greenland is we saw gold all for the past 3 weeks continue up at market open and continue pushing up with gaps. And then when the actual conferences Davos happened, Trump's like, "Hey, you know what? I'll chill out on the tariffs. I'll take back the tariff threats." And then gold saw a massive correction within a few minutes, right?
Yep.
So all of this is very calculated. But as day traders, we need to have enough foresight to see that, okay, this is happening right now, but there is optimism around the corner, right? So you have to always keep that in mind is that, okay, we are seeing inflows into gold. We are seeing inflows into other safe havens like Swiss franc, Japanese yen, but we're going to see times where we will see that optimism. Like we will see these trade deals get walked back on, but the overarching sentiment will still always prevail. Just like how data reports sometimes cause these pullbacks, the same thing can be happen with central banking statements, political statements. Market just moves in waves, right? Just like life too. Life has ups and downs. Market moves the same ways, right? I'd love to share my screen. We
Absolutely.
can
Go
go
for
a
it.
bit deeper into today. We have some very exciting updates coming for market this week. Fortunately, I can't show you guys this at the moment,
Oh,
but
I was going to say we're going to get
yeah,
a sneak peek.
I wish.
Oh, man.
I wish I could give you a sneak peek. Sometimes even as a founder, I can't override what my engineers want me to do. So
Gotta listen to the team, man.
they
Listen, we
want to
got
see,
this
they
far. We're
want
only
to
going to
see.
go further. Gotta listen to them.
Exactly. So yeah, we for the past few weeks we have just seen continuous gaps on gold, as you can just see. Every Sunday market open, gap up, and continuation up. It has been a very easy trending market to play if you understand how to utilize fundamentals and stay on the right side of the market. But there are periods where you'll see this massive drop over here, right? Like let's see what happened here. Trump announces Greenland deal framework and cancels February tariffs, reducing geopolitical risk premium, right? So you can see that these headlines right here, last week on January 21st, Trump, based upon this understanding, I will not be imposing tariffs that were scheduled to go into effect on February 1st, right? So these are the tariff headlines that came out in the conference in Davos that caused this price action, this pullback on gold. However, since the overarching sentiment on gold remains to be bullish on both the day trading and swing trading trade ideas, as well as our bias factors such as Fed rate cuts up to 150 basis points priced in for the year, central banks buying 60 ton of gold monthly, global central banks, right? And overall, just market structure also remaining bullish, we can continue to see the ranges get pulled out, filled up, pullbacks get bought back up, and it's been a very easy market to trade across gold, ES, and even silver, as you were talking about, because silver has seen a monstrous rally, right? So silver's seen a monstrous rally, and it's been commodities is just in its cycle at the moment. So for high impact headlines that you were talking about, we did have South Korea headlines come out overnight, right? So we had those headlines come out. We had India EU deal come out as well, which we can see market already marked up here, right? So trade optimism in that case. We had a ton. South Korea will express a U.S. willingness to implement tariff agreement, right? So a lot of these headlines you need to watch out for. And since the markets are global, everything works hand in hand. Trump is playing a much larger global game here on a scale that is very hard for an average retail trader to keep up with. But when you have a platform that can break things down with such ease and only highlights the main things, now it becomes much easier for you to understand what caused this price action, right? You can click any candle you want, understand exactly what happened in it, what impacted it, and it has just been, honestly, Trump presidencies in the markets are my favorite. Like when's the last time Biden or like the previous presidency was this much fun in the markets? It wasn't.
Yeah, right. I
Yeah,
remember Biden
something
tweeting.
going on.
Imagine Biden tweeting something.
Exactly, right? So Biden can't tweet, right? He doesn't know what Twitter is. And Trump presidency are just so much more fun. In my opinion, I care about the markets.
A lot more
I'm not
volatile.
emotionally attached to any of these situations that are happening. I care about the markets and making money. That's what I'm here for.
Yep.
Right? I'm not here to give some opinion on what I think about this thing or this thing happened around the world. I'm here to make money. That's my primary focus. So when Trump does these plays, it's a very easy to understand that, okay, he may be saying he's going to impose 100% tariffs on Canada if they work out a deal with China, but is he really going to do that? Probably not. And now Canada is going to be less hesitant, is going to be more hesitant to work out a deal with China. And now it's going to give Trump the advantage to walk that back down, right?
Yep.
So a lot of this is, again, as we mentioned, playbook. But let's get into some of the data, right? Today we don't have too much except for consumer confidence at 10 a.m. Eastern, which if I click the brain icon here, I can open up the playbook for it. So consumer confidence today at 10 a.m. Eastern signals consumer spending trends, influences Fed growth assessment, historically moves USD and equities, and risk off assessment sentiment policy disconnect, right? So when we look at the values here in the playbook, markets are forecasting a 90.9 reading, which is an increase from the prior, right? With the minimum being an 88 and a maximum expectation being a potential 93. So when we open up the market playbook, we can see that the impact of currency in this case would be US dollar. If we get a reading above 92.5, we'll be bullish on the dollar. If we get a reading above 93, which is the maximum, so above this, we are very bullish because it exceeds the maximum expectations set by analysts and economists, right? So again, range bound if we're on the forecast, and then bearish if we're below 89.5, and then very bearish if we're below the minimum of 88. This is where the minimum and maximum expectation values really come into play. You have to understand that economists are watching more than just the prior and the forecast figures. They're watching an expected range. And this institutional range is only available on institutional calendars such as the Bloomberg Terminal or London Stock Exchange's Workspace, which 99.9% of retail traders are not going to be willing to spend $3,000 a month in order to get access to that data set. So we have it for our traders in the most advanced economic calendar that exists in the retail space. After that, we have the Fed funds rate interest rate decision tomorrow, where if I open up FedWatch on CME, I can see that interest rate probabilities for a hold are at 97.2%. The markets are already pricing in that hold, right? So we understand that markets are pricing in that hold. We are seeing Fed's fund target rate tomorrow at 2 p.m. And then obviously we will have Powell speaking at 2:30 over here. Federal Reserve Chair Jerome Powell holds a news conference. So when we look at the interest rate playbook, we can see the lower the interest rate is, the more bearish it is for the currency, because it means that the dollar is going to get devalued. We're in a more easing monetary policy, which is going to hold weight on the dollar, right? The higher it is a more hawkish monetary policy, meaning that credit's going to be harder to get, rates are going to be held higher for longer, and you're going to see more of an inflow of demand into the US dollar, right? So this is in focus for tomorrow, FOMC rate decision tomorrow. So this is in focus, directly sets Fed policy rate, shifts Fed rate cut expectations. And in this case, the expectation is that the Fed is going to hold the interest rate tomorrow. The main meat and potatoes will be what forward guidance Jerome Powell provides at the rate decision conference at 2:30 p.m., 30 minutes after the interest rate decision is published. So 2:30 p.m., that will be cool to see what Powell says, and all of that will be coming into the news feed. Every single headline, first to get in the game, instantly broken down. So make sure you're watching out for that.
Awesome, guys.
What are your thoughts on that, Kevin?
Dude, that's great. I mean, I want to see what Powell has to say. Like you said, tomorrow it's already priced in 95%. We're not cutting rates. That's pretty obvious. It'd be a major surprise if they were like, sure, 25 BPS, but it's probably not going to happen at this point. If we look further in the Fed watch to the next couple months, they're also pricing in a hold. So it's really a tough call. You know, Powell would really have to pivot dovish to force a lot of optimism in the market to go along with the tariff relief to give us a strong rally in things like the ES and NQ. As for gold, I feel like we're consistent enough. There's still the supply issue with silver, which is helping the heavy metals.
Yeah, there's very thin liquidity.
Yeah.
Right. Yeah. Big supply issue as well.
Yep. So that's impacting silver a lot, the supply deficit. But as for gold, I mean, it's really riding off of just the geopolitical tensions. I believe, where was it? Iranian officials threaten all-out war response to attacks, but Russia also had a massive strike on Ukraine as well, which, again, are fundamental catalysts for something like gold and silver to say, hey, let's go to a safe haven.
Yeah, exactly. And gold's sitting at these all-time highs. I'm not a big fan of just buying at these highs, but it's just we are not getting more of that pullback besides like this structure that we saw over here, right? Yesterday, we had some profit taking happen from 5,100. This is crazy to me, right? Isn't it nuts how gold is sitting right at 5,100?
Bro,
that is such a money. I remember when I started day trading in 2017, almost 10 years ago, or 2018, gold was at $1,200 an ounce.
Wow.
And that to me is absolutely ridiculous that we have seen gold. I started when gold was down here, $1,200 an ounce, 2018. And it has been on such a crazy run. I remember trading these markets too. This over here is exactly what we're talking about. This market right here, Kevin, was Trump initially going after China, imposing tariffs. This is how gold broke out of its $1,300. This from 1,100 to 1,300, which it was ranging in since June 2013. It took 6 years. It took a volatile president like Donald J. Trump to come in, shake things up on a global scale geopolitically, and we saw a lot more volume start to pick up in the market, a lot more liquidity, and a lot more geopolitical tension starting to uprise globally.
Yeah.
And this is the entire tariff tantrum that happened in 2019 right over here. And then we had COVID come into play, right? COVID happens. We see large sell-off on gold until March 20th, 2020, when the Federal Reserve comes in and says, hey, we are cutting rates down to near 0% and we're starting QE. This is where rates got cut, money got flooded into the financial system, dollar got heavily devalued, and we saw gold reach all-time highs of 2050s. So since then, you can see how gold goes through these cycles, and every consolidation, there's always something in focus in the markets, whether it be interest rate decisions, whether it be something on the geopolitical stage. It is always something that's going on in the markets. And for us, it's our job to not be ignorant. I know people say ignorance is always bliss. It's not bliss in the financial markets. You're gonna get eaten alive. I'm telling you. You're gonna be buying at a high, and then Trump's gonna come and say something, and you're gonna lose thousands of dollars in a second. Like,
Yep.
you need to be vigilant. This is why ignorance is not bliss in the financial markets. You need to pay attention to what's happening, and if you don't, you're gonna get eaten alive by the sharks. That's it's simple as that. It's a man eat man world in the markets, and if you can't at least understand that you need to keep in mind what economics, finance, and geopolitics are, you're destined to lose. I'm sorry.
Yeah.
Like, you're not going to make it. You're not going to make it in the game.
You have to have some type of insight, some type of input, some type of analysis on it, right?
Yeah.
And that's where market comes in to say, hey, listen, let's take all of that hours of fundamental back testing, all those hours of figuring out what's going on, all that research you would have to do, put it into one platform for you, and break it down for you as simple as can be.
Absolutely. And that's it. It's just as simple as that, right? ES as well, we're holding right below 7,000. Like, we're holding right below 7K. We can see there's a few things. There's South Korea tariffs, EU India deal, right? A lot more risk going into a lot more liquidity going to the risky assets, right?
Yep.
If I open up ES, very, very clean price action that we've been talking about from like all the way down here, 4,800 buys. We're so clean on S&P, and markets have just been rallying off that optimism. Yes, every now and then we'll see the outflows happen, right, due to some geopolitical tension. And then Trump will walk it back, and we'll see markets pick right back up. Constantly, This has been the playbook the past year, all the way from over here, where he came out swinging and then walked it back the day after, saying, oh, China deal's looking good. There's a lot of optimism, a lot of people wanting to cut deals with us. So that's just the playbook, right? And stock market's going to continue. And then by midterms, he's going to say, look where I took the stock market from.
Yeah, exactly.
I took it from 4,800 to 7,000 plus on S&P. Like, you saw what Trump was saying few days ago. He's like, yo, Dow's going to be at 100 grand. Dow at 100 grand. Can you imagine that?
All right. Listen, man, go for it.
Yeah, go for it, buddy. Please. I hope it gets there.
Yo, Nilabh, what I love too, man, and guys, everybody here that uses market can do this. Go to the backtest fundamentals on ES, and on the 4-hour, we're able to see, if you click the down candle we had recently at January 20th, the big red one. Yeah, so if you click the red one, it's going to tell you what drove us lower, right? And that's going to be the whole geopolitical, the Trump, the Greenland tariffs. And then once you click that next following green one, right, we get our reaction. It shows us, it tells us, hey, that was the de-escalation.
Yep.
Tariffs.
Reducing geopolitical risk premium.
Yep.
That's what I'm talking about, guys. It's as easy as, tell me another platform that can do this.
Can't.
That you can click a candle. Can you do this on TradingView? Can I go here and click this and understand what's happening? No, I can't. Does TradingView tell me anywhere what happened in this exact candle that caused this massive move? It does not. Find me another platform that can do this, and I'll pay you $1,000. Find it to me today, tomorrow deadline. I'll pay $1,000 that can do this exact same thing. You can't. This is the first of its kind. Everything we build is a first of its kind. We're not out here copying anybody. We're out here purely innovating, and this is deep financial markets knowledge plus a mixture of deep engineering. This is how we built this. This isn't built by accident. This is built very intentionally. This is built because we understand what retail traders need. You'll see a lot of these copycat platforms just dump information out on you, expecting you as a trader to figure it out. That's not right. We're here to make things easy for you. We're not here to make things hard. We're here to innovate. We're here to push new boundaries, have competition. Nobody does it like this. And I'll put my money on the line. I'll put my money where my mouth is on this, you know? So exactly how Kevin mentioned over here, you see Trump Greenland tariff threats trigger global risk off sell-off, right? S&P Nasdaq slumped to 1 month lows on Greenland dispute. Global bond market shaken by Japan sell-off, Greenland worries. Wall Street ends lower amid global sell-off on Trump threats, right? So you can clearly see all the headlines here. And then if you just go forward a day or two from January 20th to now January 21st, what happened here? Trump clarifies no military force for Greenland, reducing geopolitical risk premium. Look at the market reaction. That's the low we created. This is a de-escalation of geopolitical threats. And this is the exact playbook we talked about at the start of the show, where we saw the threats come out about tariffs and military escalation. The threats get pulled back and markets start rallying again. Guys, it is this simple. It does not get heavier. And again, the next scandal too, Trump backs off tariffs, announces Greenland deal framework. Geopolitical de-escalation reduces trade war fears with Europe. Risk on sentiment boosts equities after tariff threat removal. Dollar gains, but stocks rally on positive Trump rhetoric. Treasury yields slide, supporting risk assets, right? Boom. Based on this understanding, I will not be imposing tariffs that are scheduled to go into effect on February 1st. That's it. Like, look how cool this is. This has never been done before. And everything we build, all the way from our playbook that break down exactly what happens when this consumer confidence comes out today, this has never been done before. A headlines feed that is so in-depth and intuitive for you to find out what exactly is high impacting. Plus, it's community driven, as well as you can react to it and it shows up in the popular headlines. Never been done before. Straight annotations on the chart, something that even TradingView, a $10 billion company, has not been able to do yet. This is what I'm talking about. You can't beat people who are hungry like us. You really can't beat us because we are so far and beyond what any other company is capable of building. And this is purely because everybody on our team has the exact same mindset I do, exact same mindset Kevin does. Like, we are all high functioning individuals who are creative and understand markets and fundamentals to an absolute core. So that's where the magic is. The magic isn't done in just having knowledge of one or the other or trying to shill out a product that is not useful to traders. It's about building something authentic. It's about building something unique that the public has never seen before. And that's where you will start gaining fans. You will gain a loyal user base who will give you feedback, who will help you drive iteration on your product. It's bound to happen. Market's bound to be valued at $100 million. Market's bound to be valued and scaling to masses globally. I'm telling you, last year was setting the framework and taking us to a company that does 7 figures. Now it's the real game. Is we're scaling and we're not stopping, both on the product side and distribution side. And any of the platform copying us, I'm telling you, you guys cannot keep up.
Nah.
Kevin knows. You know what I mean? Like, this is it.
Bro, market's like the NVIDIA of the fundamental space right now. Like, we're just so far ahead. The next come up is like the AMD, right? And we could even call that Bloomberg as sort of our competition. But like, competition where? That's thousands and thousands. What's that? 25,000 a year for a Bloomberg terminal versus market is 50 to 70 a month. I mean, come on now, guys.
It's gonna keep getting better. We're in it for the long haul. This isn't a prop firm. I'm not here trying to shill something. What was the biggest challenge for you when starting to building market? Building it wasn't as much of a challenge because building is easy, right? Plus, I'm an engineer, so I can build it initially. The hardest part, in my opinion, for any company is gaining traction, right? But for us, since we had traction through the capital hungry community, followers, like, we were able to get our first initial set of users, but that's what ends up being most people's main issue. But for us, I think my biggest challenge and it paid out tenfold, was assembling a really good team. And the way I did it, and the way we did it, Jeev and I, we decided to not go out looking and posting these job postings online and then interviewing hundreds of people. We decided to reach out within the community, and people who had the required skill set could come work for us. And a lot of times these people came, showed us value. They're like, hey, I could do this, I could do this. And we're like, cool, let's test it out. Right. And that's what was the hard part initially, but then the team scaled, and so did the company. The company scaled. So to me, that was the hardest part. It's as you go, you just figure it out. One thing I learned is nothing was truly as hard as you make it out to be. The way will always unclear itself. And yeah, that's just
That's awesome.
just a little bit of wisdom.
Bro, what I love too, guys, about market, and for anybody who's even used market for over a month or two, is you've probably seen the progress that market's constantly putting out new updates, constantly increasing its quality and what it offers to the trader. And we're not slowing down. Right? You guys are
just a few more days. Yeah, sorry to interrupt you, Kevin. A few more days, crazy update coming out. I'm telling you.
Bro, I can't wait. I can't wait, man, because the facts alone are every time market drops an update, it's a game changer, right? It's mind-blowing. It's some type of economic calendar that gives you institutional level brackets of information of where we should be forecasted, a backtest fundamental tool that isn't anywhere else, and then, of course, most recently, the annotations on the chart.
Yeah, exactly. And then these are just getting improved. This was our initial variation of it, right? Like and this is where one thing actually I realized as a founder last year, was that having a simple AI integration into an application is no longer accepted anymore. It is the very bare minimum, and it's essentially laziness.
Yeah.
If you just add a simple layer of AI into a platform that you're building, that is laziness. You need to have deep workflows. And these deep workflows, this is what I'm telling you guys, is that it took us a long time to figure out a lot of these workflows that take into account every live information that happens, filters it out, processes it across global instruments. Like the same feature can be applied to any instrument you're looking at. No platform has done this. TradingView is still unable to do this. Right? None of these copycat platforms who are now integrating AI and trying to make their platform look exactly like ours have the knowledge. A lot of these guys aren't hungry, so
they're not capital hungry.
Exactly. And the thing is, like, this is just the first iteration of the annotation. This is getting improved. There are more improvements coming this week. Stay tuned. We'll be announcing it, and you'll see we work fast. Speed is our number one priority, and we at the same time make sure you get the best platform possible.
Dude, that is great. I'm excited, man. Any updates on our capital flows or our market AI sentiment index today?
No, nothing. Like, even if we just look at, so I'll break down what we're doing from a higher level in the company, right? Kevin, you already know this, but just for the viewers across like Twitter, YouTube, Instagram, we are making the platform into a place where everything you need is done on this window here. Everything, all the way. Our goal is to make it so all the way from the calendar events to everything is consumed either directly on this chart or through this feed over here, right? So little by little, you'll see the daily bias is now basically been replaced by the home dashboard, right? Yes, economic calendar exists. Slowly, it'll be integrated into the chart over here, so make it more actionable, right? Backtest fundamentals is already integrated into here, where I can go here and click a candle, right? So a lot of these things are already happening here. So when we look at, like, let's say ES is still bullish, right? Market sentiment is still continuing to hold bullish here. We are seeing all these factors that support this bias, and it's just overall looking like the markets are going to be are still in that like risk on sentiment right here, right? And you can see the main thing are Trump tariff threats. New 25% goods announced on South Korea. So the volatility from that, gold is surging. There's sector rotation happening into tech, and it's a very, very optimistic future.
Yeah.
Looking for ES above 7,000.
Nice. That's I can't wait, guys. We got to stay bullish off those fundamentals, right? We got to see how markets want to play out. We've been making higher highs off our technicals, higher lows off our technicals. So now our technicals and fundamentals are lining up. Can this trend continue? And again, using a tool like market, we can confirm right now, as of now, it most likely will continue. But using market with the high impact headlines, we know that all it takes is one headline to reverse an entire market right now.
Yeah. Or cause a deeper pullback. No,
Yeah.
I wouldn't say reverse, but cause a deeper pullback, right?
Exactly. It's funny, I say reverse, but I do mean a deeper pullback.
Yeah.
But some of these reversals, they would be reversals if he doesn't step back and say never mind each time.
Exactly. 100%. You're right about that. Like if he exactly look at this, exactly what Kevin brought up. January 20th, Tuesday. Threats. January 21st, Wednesday. Pull back the threats. Like this is the playbook we're talking about, and then the market rallies. So
he's got to be careful, man. He's making it a little too obvious that that's his deal of the trade.
markets, hey man, the markets eat it up.
Oh no, markets eat it up. I'm saying the people he's dealing with, though, other countries, they're gonna start taking him I would think not seriously at all. Seeing that,
yeah, but that's the thing, right? It's like you're playing with fire here. It's like, when somebody threatens to burn down a house, do you really want to take up on their threat to burn down your house? Probably not.
True. That's true.
You're probably going to be like, hey man, like let's calm down a bit.
Yeah.
Let's put the lighter down.
Yeah.
Put the fuel down, buddy. Right? So it's the same principle. Is that if somebody came to me and they're like, yo, Nilabh, I'm gonna burn your house down. I'm like, fuck. All right, you know what? Calm down. Let's talk this through. We don't need to go that far.
Right. You don't know if their lighter's full or not.
Exactly. You don't know if this guy's bluffing, and he's a very volatile person. So personally, me, I'm like, you know what? Hey, buddy, let's work together. Hey, Mr. Buddy, Trump, let's work together.
Yeah. No, I get that, man. I know I always say too, something they say as a newer trader you'll hear is that when you're trading, you're going against some of the smartest people in the world. Well, then don't go against them. Trade with them. They're moving billions and billions of dollars. They don't care if you make a few hundred, a few thousand.
And they're people, right? Like they operate off psychology.
Yep.
This is Trump psychology. This is how he negotiates.
Yeah. Yep.
So
how he negotiates, how he moves markets.
Absolutely. But yeah, we're looking very range bound on gold at the moment, just sitting at these highs. I personally don't like, if they couldn't get a buy-in on this pullback, but this was a great way to get back into gold. Either we're going to continue to consolidate here. We do have the rate decision tomorrow, so I'm not expecting too much movement in the markets at the current moment, especially with Powell's speech being the main catalyst tomorrow at 2:30 p.m. Eastern. What are your thoughts, Kevin?
Yeah, we're, like you said, we're range bound. Powell speaking. Hopefully, it's a catalyst that gives us something, right? That breaks us out of this range.
And the eyes will be on the forward guidance he provides.
Exactly.
On the next upcoming meeting on March 18th, I believe.
Yep, exactly. If he says, listen, guys, we're going to stay a little hawkish. I'm going to look to hold rates. Quite honestly, that could lead to markets holding this range a bit longer, right? Until we get something that's a bit more stable.
Some data report that again fuels towards the bias of, okay, rate cuts are coming.
Exactly, like high high unemployment, high non-farm payroll, things like that. Let's see, Michigan consumer sentiment, I believe if that's lower, that would also increase the odds of a rate cut. But what's cool too with market is with the economic calendar, when you click on some of those high important ones, it'll tell you if it's in sight, like if it's in range or if it's going to have that impact versus not.
Yeah.
Let's see if we can find an example of that.
So this week we don't have any other ones except for of course, the traditional initial jumps that we have.
Yeah.
And then, of course, you can use the playbook. And most people get this confused is that the lower number in this reading is bullish on the dollar because it's initial jobless claims, guys. The higher the claims are, the more unemployments are being filed for the initially for the first week, right? Yep. So again, and also with the continued jobless claims as well. So that's something important to keep in mind. And most economic calendars don't properly differentiate.
Awesome, man. Guys, good stuff, guys. Great episode of Market in the Morning today. Nilabh, do you have anything you want to leave us off on?
That's everything, man. I think we went over a lot today.
Awesome, guys. Absolutely killed it. Guys, drop a like. Make sure you're subscribed. We do Market in the Morning Tuesdays and Thursdays. Absolutely phenomenal system, phenomenal platform, and it's something that every trader needs in their back pocket to stay ahead of what's moving markets. Because once a big headline comes out, no joke, it will move markets. It does not wait for a tweet. It doesn't wait for the news to cover it. It comes out as soon as the headline comes out, and that's where market is so much more ahead than even just watching or having CNBC on in the background, right? You're not going to get those headlines immediately.
Absolutely. Amen.
Awesome. Awesome. Guys, like and subscribe. We will see you guys next time. Take care. Peace out.
Take care.